Welcome to Candy Swick and Company, the website. We are here today with Tramm Hudson, and Tramm is an independent banking consultant. Tramm's been in Sarasota just a few years.
Just a few. Seems like a long time, but it's been very short, since 1986.
That's quite a long time for most of us Floridians. So I've asked Tramm to come and speak to us, one, because he's an independent banking consultant. He started, why don't you tell him, Tramm?
Well, just briefly, we moved here in 1986. I was with a large regional bank, and like everyone at some point in time wants to go out on their own, we started a small bank with a group of people in 1988 and grew that bank for about 10 years, and then got the proverbial offer that you couldn't refuse, and we sold it to Provident Bank. And then we sold Provident Bank in 2003 to RBC Bank. And I've been involved both with small banks, large banks, medium-sized banks, and now I'm an independent banking consultant.
So I'm coming to Sarasota,
Right.
or I'm in Sarasota or
Yep.
Manatee County, and I need to put my money someplace, or I'm looking for a bank. What do I look for?
I think still today, the number one reason people choose a bank is for convenience. Whether it's drive-through facilities or a number of ATMs that are around a town, convenience still really drives that decision. But I think it's very important in today's world that people make sure that the bank they're dealing with is one of a substantial means that carries FDIC insurance.
Okay.
And as you know, Candy, just this past week, the Congress lifted or increased the amount of FDIC insurance for each individual account to $250,000. So say a couple on a joint account could cover up to $500,000 in FDIC insurance, and I think that's very important.
Oh, I just learned something. So if it's $250 of insured,
250,000.
Thank you, 250,000. Couple zeros there. If it's $250,000 on an insured account, that's for an individual.
That's correct.
So if I am a husband and a wife,
in a joint account, you could cover as much as $500,000. And frankly, if you have children or if you have others, there are ways that you can title the accounts to actually cover more. And I would encourage your viewers and the folks that are surfing the web that you'd want to check with your bank to assure that the title on the account maximizes the coverage with FDIC insurance.
Interesting. If you were looking at the market in its entirety right now, they're talking about the meltdown, and I look at the market and say, we've really only had this big subprime issue for the last 2 or 3 years.
Right.
Is it really just 2 or 3 years that have caused all of this, or is it an overreaction?
No, unfortunately, I believe that it began probably 10 years ago. The whole idea of unintended consequences. We had an initiative, at the federal level to encourage home ownership and to spread that among as many as possible. And Freddie Mac and Fannie Mae were encouraged to make loans to people who may or may not been able to repay those loans. And they devised these exotic products where you had teaser rates, where people were able to get in at low payments, but those things would adjust. And in today's market, I would encourage people who are applying for home loans to make sure you understand how that loan works and that you're able to handle those payments going forward.
Let's say that my son, a young man,
Yeah.
and he's going to go out there. Who would I send him to? How would I help him in this process? What would you suggest?
Well, I think, one, working with a professional realtor
Okay, thank you.
who's knowledgeable in the area, that's always helpful. But I think, you would go to who they are banking with at that time, because, a bank wants to bank the entire individual, not just one little deal or one product, if you will, one mortgage. I mean, they want your checking account, they want your savings account, your safe deposit box, your trust account. And, working with someone, I would encourage them to look first at who they're banking with right now, because that's a natural entree.
Gotcha.
And I think, taking a professional's opinion who's been in the market for a long time, their recommendations, who they would go to, I think is key.
That's great. What else would you tell someone, or what are some things that you would like the general public to know or understand that I might even not think to ask?
I would tell people that are surfing the net and are visiting Candy Swick and Company is that if you're looking for a home and you're worried about credit and you're concerned about what you've been reading in the papers or seeing on the news, I would put that aside. People who have good credit can get good loans because banks will continue to make loans. It's the way they make money. And I would encourage people to, look at their own financial condition, see what they can afford. And I know that on your website you have mortgage calculators that you can use to determine that. And then I'd talk honestly with my banker or with your mortgage company and see what is out there available. Because people with good credit can still get good loans.
I think that's huge because there's a belief there that there's no money anymore. And one of the other things is we used to have 100% financing, or we used to have 2 or 3% down. Are those products still out there?
I think the days of 100% financing are gone by the wayside. We've seen a reduction in property values here in the last year, that whereas you used to make a 100% loan, you could count on the rapidly increasing property appreciation to cover.
What was there?
And it's not there right now. And I think bankers and lenders will go back to more traditional 80% financing. But in certain cases, you can probably get more if you look hard enough.
And what is the FHA?
Federal Home Administration. And I believe that we will see more FHA loans being made, whereas you used to have more of the Fannie Mae, Freddie Mac underwritten loans. FHA will be, for at least for the foreseeable future, the way that lending. And what's important here is that the banks need a way to turn that money over. And Fannie Mae and Freddie Mac and FHA allowed banks to sell those loans in a secondary market so they could replenish the liquidity so they could make more loans.
So it was a revolving door. You came in, borrowed money from me, I sold my loan to Fannie Mae or Freddie Mac,
who then provided more money back to make more loans. I think that will be tempered somewhat, but still I think FHA will be now the vehicle that's used, at least for the near term.
And so FHA, if I understand correctly, FHA can offer a 97% financing for the very select few who have
excellent credit. And also those, there are also other programs for first-time home buyers that people can take advantage of. But I think primarily the people who are moving in Sarasota are probably on their second or third or fourth home.
Except for their children.
Except for their children, that's true.
That's right. So we really appreciate having Tramm with us today. And Tramm, if there's any closing words or advice you'd like to give us, we're all yours.
I would just say that, so much of banking is built on confidence. And I would tell people that we should all take a deep breath and just pause and make sure that the bank that we're dealing with is safe and sound and secure. And the number one thing is make sure that your account is insured by the FDIC.
Tramm, thank you very much. Appreciate it.
Terrific. Glad to be here.
Thank you.